All right, that should fix it. Ben, I've been... Welcome, ladies and gentlemen. Thank you for letting me know we had a sound problem. I've been thinking about so many things I have to say to you that I forgot to press the right button. But anyway, look, we're on air now and we've only lost 2 minutes. So welcome, folks. Good evening to you, ladies and gentlemen, in the Northern Hemisphere, and good morning to all you folks in the Southern Hemisphere. We have quite a lot more of you these days than we used to, which is kind of interesting. I was just saying, nice to see old and new people here today. Akhtar's with us, Albert, Alan's new one, Ben Waldron, of course. Ben, thanks for keeping me up to date with your sound issue. That's good. Bernard Stricker is with us today. Bernard, anyone who's been to a tutorial will know Bernard and Gabriel can never be forgotten. Great blokes. And I know, Bernard, that you've been ill lately, so I hope you're on your way back to recovery, mate. Bill, Ford, Bob, Perry, all good old friends. Craig Eyes. Craig's a newish guy. He was up here with his family 10 days ago for a break at the Gold Coast, and I was due to meet him and have a beer. And I apologise, Craig, I had a bout of malaria, which laid me low for quite a few days. I was born in India, in Bangalore, India. My father was a Royal Naval officer, and he was based in Burma before the Japanese invaded, and then got out to India with his troops, and then went back to Burma after the war. So I spent most of my younger life in India and Burma, and contracted malaria at one stage, and it's a nasty thing that never leaves you. So, I have a sort of a bout of that a couple of times a year. But, Craig, that's why I couldn't meet you, and I apologise. David Webb, the king of the black lines. D. Webb knows more about the black lines than anyone. Good to see you here. Franklin Birch, hello there. Fred Secco, he's a good old bloke. I met him up. He came to our Chicago tutorial some years ago. Frederick Graham Johnson down New Zealand. Hello, mate. Chip Stevenson. Hi, Hank. Harry Lucas, a name from the past. Harry's a very famous psychologist. He's a professor of psychology at the University in Tasmania, and he's an old mate of mine. We had some riotous times together. Good to see you, Harry. Jan, hi. Jerry, our broker, is here with us. John Barnes is a guy who's really interested in timing and the fourth seal. John Watts, too. So many of you. Lois, hello, darling. Nice to see you here. Marcel, my friend, I hope you're feeling really well up there in Canada. I can't actually. There's Marilyn. Marilyn, I'm sorry, we haven't heard from you for a while. I understand you're not able to go on with your trading. Write me an email. Tell me what's happened. See if I can help you. Michelle, Milton, yeah, MMMM. That'll be Rob probably. Neil McMillan's old mate of mine. He used to be a member. He's not now, but he's a great supporter of ours. Peter Andrews, he's my old mate too. And Peter Norton's doing very well with Fraxen Forex down in Wellington. Oh, there's Rob H. So he might not be. Hello, Rob. How are you? Hope things are a little warmer over there in New Zealand than the forecast said. There's my friend Shift. So, lots of people. William Brod. Hello, people. Anyway, welcome, everyone. You've heard all about that. Lots to talk about today. As normal, we have Daryl Narain with us as our special guest. Daryl, good morning to you. Where's Daryl? Daryl,
good morning, John.
You are there. Just unmuting. How are you, my friend?
Unmute. Bit cold here this morning, John. It's had the odd hail showers, hail sort of passing over, and hailstones on the ground, but I was actually chatting with Jerry this morning because it's, I guess it's summer, middle of summer in Chicago, but when I start telling Jerry about our cold winter weather down here, of course Jerry in Chicago get no sympathy from him at all with the winters that they get there. So.
No, I just don't understand why people live there, but then I don't understand why people live where you are either. And it was worse where you habitually am in Taupo. Of course, it's even colder there than where you are in Wellington. But I have to tell you that I suppose in about 2 months I'll start complaining about the heat here. But winter at the Gold Coast, I have to tell you, it's just absolutely fabulous. It's sort of 22, 23 degrees. I don't know what that is in Fahrenheit anymore, but it's very, very nice. So, you know, we have cool nights, beautiful days, sunny, ocean looks great. It's a lovely place in winter, so I'll just have to find a way to get out of here in summer, my friend. Anyway, Daryl, you're going to talk to us. You're going to talk to us all about the Fraxen, which has had a pretty dreadful month in July, and I'm going to come to you in about 35 minutes or so, if that's all right. And I know you've got all the results there to talk to us about, and some ideas that you're working on for some more sophisticated ideas of stop-loss management. Is that right?
Yes. Okay, John. We'll talk soon.
Okay. Well, we'll move on with the main trading stuff now and come back to Daryl. If you could mute your microphone, Daryl, we'll get back to you. Okay. So let's have a look at where we're going today. Folks, you've been looking at a Fraxen chart that, as usual, Sage has been kind enough to prepare for us, and Fraxen's been having a rather nasty trot through July. In fact, it's had a dramatic fall-off in performance, so it's nice to see that chart there, at least, which is gold. This is our weekly review. I want to try and do this. I don't know. You know, I always say I'd like to do a webinar every week, and some weeks' time just beats me. But it's really good to, you know, get together maybe on Friday night if it suits you people, and look at some current trades and what's happening in the market while it's fresh in your mind. Let me just show you a couple of slides to get the formalities out of the way. Any of you guests today who are interested in the Danielcode, who would like a free trial of any of our products, you're most welcome. Please contact Terry at support@thedanielcode.com, and he'll be happy to enable a free trial of anything we have for you. And if you need Trade Navigator charts and software, we can organize a free trial of that for you also. We have a fairly simple philosophy here that we have a number of different products, and some might suit you and some might not. So we don't try to sell you anything, but we're more than happy to offer you free trials to anything, and you can make up your own minds whether that's something you like and will suit you or not. Here's our compliance statement, folks, which I'm obliged to show you every time, particularly in regard to hypothetical trading. In the third paragraph there, the results that we're going to talk to you about with Fraxen. For those of you who haven't been with us before, they've been kept manually, an enormous job to do, an absolute labour of love by Mustang and Sister Sage. And but it is keeping results manually. That's hypothetical scoring. And it has severe limitations, although Daryl will tell you the way they have been scoring, it's about as close to real time as we can get. So let's finish off our short slideshow and move straight away to the charts. And we've got a whole number of things I want to talk to you about. Your chart should be changing now. We're going to look at the S&P, which was a good proxy for all of the equities. And we're going to look at that in a series of different time frames. We're going to look at gold as well, very important where gold is at the moment. And when we've done that, we're going to look at about 8 different markets where we've had trades this week, both good and bad. So we're quite appraised of the concept that, some weeks are better than others. So let's start with the S&P. You'll see this chart here is WP. This is in fact the big futures contract in the S&P, and I've got a number of different S&P charts I'm going to show you here, and they all get a bit cluttered, but the main points will be clear to you as I use the different charts to go along. Now, I wrote the article S&P in a cocked hat right at the end of June, and said that we were likely to have a correction, and it might be a significant correction. Those of you that haven't already read that article, it's available at the website, and I suggest you do read it. And there we were working off a 24-day chart. So this, you can see that the closing high, this is the 6-day chart, came on July the 23rd. That's the closing high of the move. So we were nicely well ahead of that. You had plenty of time to think about having a pullback and following the Danielcode signals, some of which we're going to look at. The important point there is that we had our 59 cycle. Here it is running along the top. It starts from this low here, which is an important low, and it runs along, and there's the first 59. That's time, and as you know, it shall be for time, times, plural, and half. Well, there's the half at 89, didn't give it anything, and up here at the 118, that's times. That's two iterations of the Danielcode 59 cycle, and iteration simply means occurrence or happening. So these signals, once they're there and locked in, they just roll around and continue. And sometimes they can go for years and years before they re-establish themselves. But 59 is the dominant time cycle for equities and almost all futures markets, other than gold. The time cycle for gold is 44. And it's iteration, so 44, then half, and then twice, and then 2.5 times, and 3 times, and so on. And you can read about these time cycles. There are 2 articles at the Danielcode website under the Articles tab called Masterclass. One is called Masterclass, it's about time, and the other one is called Masterclass Timing Gold. So it's a specific one on the gold timing rules. So that's all there for you. So just looking at this, we said we were overdue, and we had some pretty strong signals for correction. And here's the first chart I'm showing you. These blue lines that you see running along here, let me go and get my highlighter, the spotlight they call it. These blue lines you see running along here from the bottom, this is a Danielcode trading channel. And it has very, very specific rules about how it's constructed. And if you don't know how to construct it, there's a webinar under the Videos tab at the Danielcode website, which shows you exactly how to construct these rules. Now, the center line here is the median. The upper line is 1 standard deviation from the median, and the lower line is 2 standard deviations from the median. And you can see here very simply what this market's been doing. I'll show you a more complete version of it if I can get back to my normal drawing tool. Is that, let's edit this line here. This is telling us that the standard deviation value we use is 1.593, 59.3 being the dominant Danielcode number in all of its price and timing cycles. And we can now move out to 2 channels. And you can see that this market has run, this is back in August 2011. In fact, since the March low in 2009, it's run within a slightly larger trading channel. But you can see what these markets do. They run along the median, they go up to 1 standard deviation, they come back to 1 standard deviation, back to the median. This one went down to 2 standard deviations below the mean. And according to Newton's law that every action has an equal and opposite reaction, we then expect it to go to 2 standard deviations above the mean, which it hasn't done. It got to 1 standard deviation above the mean and started this same behavior of oscillating between the mean and 1 standard deviation. There's down to 1 standard deviation down, 1 standard deviation up. And this high here, which could have come the week before the closing high, or it's shown here as being on the high. That's a function of which bar you use. Right back here, October the 7th is when this count starts, and that's the chart low, but the little low below, little bar before it is actually the closing low of that move. That's why these time cycles have a variance of validity of plus or minus 1 period. Just depends where you start the count. Anyway, that's clear enough, and we expect at the least that this market comes down to the median, which it's already done, and it's trying to hold on to the close there. The next target down is 1 standard deviation below the mean, which is down to about 1874, and 2 standard deviations below the mean is going to be down around 1826. Now, neither of those moves, incidentally, would change the trend. The dominant trend would still remain up if we got corrections of that magnitude. Let's go and look at another chart. It's the same market. This is the S&P again. What I'm showing you now is the index as opposed to the futures. It's not any big deal. They're substantially the same for this sort of thing, particularly on your timing charts. Both are valid, and you can see we're running way back from here. This is March 2009. That's the crash low, and you can see we have timing cycles running along there. And these red lines that you see, these are 4th and 5th seal lines. And this we had here a conjunction. I'll go back to my highlighter with you, a spotlight they call it. You can see right in here we had a conjunction of 2 of these 4th seal lines. There's one running across there, and here's one that the market's been tracking for months and months and months, and we got this intersection right in here. Excuse me. At the same time, we had a number of different Danielcode time cycles expiring. We had a 44 cycle, this red cycle along here. This is the cycle of gold. Often appears, remember these are valid for plus or minus 1 period. So the fact that this was a week earlier than the closing high, which came the following week, is not significant. It's valid plus or minus 1 period. We had our 59, our dominant cycle for highs. That came in right here at the 89. It looks like it's on the wrong line. There's this line here, 89, is 1.5 times the 59 cycle, which gave us the closing high exactly. And this purpley looking cycle along the bottom is a 70 cycle, and that's the Heathen Cycle. And it's one that we don't usually see in equity markets. We normally see that in the euro, but it is a valid Danielcode cycle. The blue one at the bottom, folks, this is a 62. This is the most common cycle for lows, and you can see here that we have that one appearing on this chart, and that right there, that'll be 1.5 times the latest 62 cycle at the end of August. And if the market hasn't already got support before then, we expect, excuse me, that will give it support. Let's move now to the 12-day chart. We run 6, 12, and 24-day timing charts. This is the old 2007 high. Excuse me, here's the crash low. This is the 12-day chart. Each bar is made up of 12 trading days. And you can see the red lines are the Danielcode 4th and 5th seal lines. And right up here, we get this cocked hat, I called it in the article, where we have an intersection of these lines, which is usually signifies something pretty important. And we had a, same as you saw on the other chart, an 88 cycle, the gold cycle expiring there, and we also had another iteration of the 59 black line cycle expiring there, and that's why I said we're going to get some sort of a correction. But the correction doesn't tell us anything about quantum. It could be simply a dive down to the 1 standard deviation, and it goes and continues on its merry way up, or it could be something more important. So That's where we are now. Excuse me, and that's what we're on the lookout for. Just point out to you again on this chart, here is the another 62 cycle. This one expires in September 23rd, so there's another level of support underneath that. So really, I guess the best view at the moment, let's go back to our 6-day. Cycle. Here's our normal correction. This came off the top, two standard deviations. This darker line here is the median. The first blue line up is 1 standard deviation. The second blue line up is 2 standard deviations, and it's now coming back, and its first target is going to be this median right here. So that number is about 1877, and it's got a few days to run on this cycle yet. So 1877, maybe 1880 around there is the first target down. If it breaches that, then you've got 1 standard deviation down at 1822, and the next standard deviation, 2 standard deviations back at 1756. Now, we haven't had a visit to 2 standard deviations since November. Since November 2012. So, you know, we're very much overdue for a decent sort of a correction, a complex multi-week correction in these markets. And one of the things that is encouraging me to the view is that for some months now these markets have been disorganized. That is, the major equity markets, Dow, Nasdaq, Russell, S&P, and the DAX normally work pretty much in conjunction, that they will tend to be, if they're making new highs, they'll all tend to be making new highs. When they have a turn, they all tend to turn at the same time. They're very, very highly correlated. And at the moment, that's not happening. These markets have broken apart some months ago and are now no longer working in the way they normally do. And that disorganization between these various markets needs to be corrected for this S&P, or look at the S&P just as a proxy for all the equities. It needs to be corrected so that these markets start to work together again. Otherwise, this fragmentation actually weakens markets. Excuse me. So at the moment, all we can say is that we have a correction. Our assumption is that it goes down to the median, which is just in here, and that's at about 1879, 1880, somewhere around there. And in that case, that would simply be a correction to the median, which is what this market's been doing all the time since this correction back here in 2012. So last 18 months, that's what this market has excuse me, continued to do. And our default is that's what we expect now. But let's keep an eye on what happens when the market gets down there. Today, Friday, we had our normal rally. The way the default for equities is that Monday is normally a continuation of whatever direction the market has been going in. Tuesday is often a rally day due to the Fed's repo action. Thursday is the day markets will tend to sell off if they're going to sell off. That's the most common day to have a down move in the equities. And Friday is almost by definition an up day. So I'm not terribly concerned about Friday being an up day. I think this down move still has further to go. Now, I'd really like to see it develop into a complex move down, which would give this whole market a chance to correct itself. Markets that just go up and up and up in one direction are dangerous. Markets that correct are healthy because they need to correct to find the level of support, and that's why markets correct. Okay, so there's our little thoughts on the S&P. Let me show you now the chart for gold. I told you in the front page This looks a bit like a cat's cradle at the moment, but I'll make it more clear for you. Let's extend this a bit so you can see it more clearly. This is gold, and you can see that it's just been absolutely dominated by these red lines, which are the 4th and 5th seal lines. This is the 6-day chart in gold, and this complex correction from the low. You can see 1, 2, 3, 4, 5 moves on it, and it's completely controlled by these red lines, which are the 4th and 5th seal lines. What we got, I showed you this chart 2 weeks ago, and it's moved on since then. We knew we had the turn at the 0.5, and then we've had 2 weeks down. Don't forget, when I say week, I'm talking about a Danielcode week. That's 6 trading days. We've had a 3 days down, 3 weeks down, right into this red line, which stopped it like a train. Very, very interesting stuff. And then, of course, that started the rally. Well, we had the buy signal for the rally, and I put a post up saying, I'll show you where this market's going to go. And where it's going to go, if it follows previous form, which is highly probable, is to this next red line here, which is overhead resistance. This existing week ended today, so we look at the next week, and the red line is up here at around 1344, and there's a blue line target at 1346. So that's likely where this move's going to go. Now, what happens then? It has 1, 2, 3 levels of overhead resistance to break through. The fact that it's finding support here and it's now made 2 higher lows, this was a false break at 0.2, so you call it 3 higher lows. This is all showing technical strength in gold, and it should certainly make an attempt on this 0.3 up at 1392 once it breaks through this overhead resistance here. So that's why this market's turning and churning as it is, and it will continue to do so until it finds another pattern. So that's where we are in gold. This is your immediate target for the long in gold at the moment, up at about 1344. Okay, so I wanted to show you that. Now let me start showing you a number of trades during the week and how you could have handled them best. Some of these are nice trades, some of them are very difficult trades, and others are trades that had no potential for making money. So we have to take the good with the bad. That's the nature of trading. And I just want to refresh you on a number of points. The main one is to use your Danielcode fast stochastic 533 as an indicator to the trend. I'm doing a big webinar for Trade Navigator. It's part of their Masters series. They've asked a number of their partners to do webinars. I'm doing mine on August the 12th, which I think is next Tuesday. I'll be putting up the notice for that on the website fairly soon, but Trade Navigator probably sent it to you already. And you don't have to be a Trade Navigator client to come to that webinar. So Bodie, my daughter, or Terry will put up the link in the next 24 hours, and do register, please. I'd like to see you at the webinar. And the sort of things I'm going to say at the webinar are entirely different to everything that you've heard in the first 8 or 9 presenters. And one of the things that is commonly said by very experienced and well-known teachers of trading is that standard tools, particularly stochastics, are not very good tools. They're not very accurate. They're reasonably unreliable. Well, that's because they don't have the full picture, and the full picture is the Danielcode numbers. Once you combine the Danielcode numbers, the blue line numbers in particular, and the TO3s, which come off Danielcode numbers, with the stochastics, they're in fact pretty good. And here's an example. This is our 533 DC stochastic. This is a special stochastic that I invented, and its main purpose, it's pretty simple, is that it ignores inside bars which are the ones you see in red, and they're the ones that create most of the errors in stochastic. So once we've redesigned our stochastic so that it ignores those inside bars, we get a much better picture. Well, here's the stochastic high. Turned the market down, away it went. We had a rally back up into attempt at the high, and that set up a Danielcode hook trade, which I talked to you about last week. And right here we had a blue line sell in the S&P. And the point I want to make to you, remind you again, is that these equity markets, Dow, Russell, NASDAQ, S&P, and the DAX, are so highly correlated that a signal in one of them can be executed in any other. And the same applies between gold and silver and Huey. A signal in any one of them is usually so highly correlated that they can be executed in the other market if the trade is elected. And what we have here is a perfect example of that. This is the Dow. This is the mini Dow contract. And on this day here, which was July the 24th, we had a blue line sell signal in the S&P. And that meant that you could have executed that signal in the S&P or the NASDAQ or the Russell or the Dow because they are so highly correlated. And here's a pretty good example of what happens if you had executed this in the Dow. And you got short right at this point here. It just got you short because we were selling. If you're selling an inside bar, I encourage you to sell the low of the last bar before the inside bar that was not itself an inside bar. So you got short just at the bottom end of this July the 24th bar. And following your stochastic, the way to trade these blue line trades and many others as well, I want to try and get you to follow these trades for a bit longer, get some more money out of them. Down they go, and if you're trading these blue line trades or using the trailing stop, what you do is you use this fast Danielcode stochastic, the 533, and you use a 2-bar trailing stop until the stochastic gets oversold or going the other way, overbought, and then you move to a 1-bar trailing stop. So that gives the market a bit of time to move, and it still gives you a high level of protection. So here we are, we're 2 days after the trade, 1 bar up. You can see the stochastic is nowhere near oversold yet, so you've got a 2-bar stop, which means your stop is at the high of the highest bar of the last 2 completed bars, which is up here at about 17,007. That wasn't hit, and down it goes and down it goes, and by the time you got down here, this stochastic was well and truly oversold, so you're on a 1-bar trailing stop when it got to become oversold, which is actually in here. It's back at this bar at July 31st. You went to a 1-bar trailing stop there, moved that along, and you were stopped out on this little bar on August the 7th. So that trade was worth $2,600 odd just on a 1 contract mini Dow basis. So let's move on. Let me show you some others. We want to try and think about how we can utilize Danielcode to give ourselves more trading money and get more out of these trades. This is Aussie JPY, and here you had on August the 5th, you had a TO3 buy signal that was actually issued for August the 4th, the little red bar. It was not elected. That was an inside bar, which means it's carried forward for another day, and you'll see all of this in the trade program, which carries forward the trades if that's valid, which you did, which means you got long on this bar on August the 5th. Now, our protocols say if you get an outside bar, you must take it, and with this particular case, you didn't get filled. There was the inside bar, so you bought at the high of the bar that was not itself an inside bar. That's up here at about 95.78. So you were long there, but you should have been aware that the moment that the bar traded below this inside bar, it's already got you elected long. The minute it trades below that, excuse me, inside bar, you technically have an outside bar because you're going to have a higher high and a lower low. And that's the stage you must take the stop and reverse. And I can say must 3 times if that will help you. This is a vital tool for handling changes in direction of markets. It's horrible. People don't like it. Akhtar gets really cross about outside bars, but they are a reality of trading. And if you know how to handle them, it may not look so nice at the time, but over a period of time, statistically, you must be able to take the stop and reverse on outside bars. So here you are, you got long, there was a TO3 signal. By the time it got just below this inside bar, you had to go short because that's the point at which the outside bar is formed. So you got short at about 95.36 or so. This day closed at 95.47. You were probably pretty cross with that, said, Needham's an idiot, etc. Maybe something a lot worse, but you didn't have a profitable close. We're waiting for the first profitable close to exit. The next day, Wednesday, August the 6th came. Again, the market went down, went back. You see how these opens and closes are matching each other. That's a sign of complete lack of volatility. We've seen a lot of that lately, but you still didn't have a profitable close to exit on. But then you see what happened the next day. Eventually, if you traded this properly and you were patient, you had this nice big bar down that closed at 94.63. Excuse me, and that was your profitable close, and that's where you got out. Okay, so bear in mind you've got to be able to know how to handle these outside bar trades. Here's CAD Chief. Here was a blue line buy, which actually came off this bar down here, which was August the 1st, but it's valid for 3 days. So it was valid for 1 day, 2 days. On the 3rd day, it was elected right at the high. So you were long there, and remember what we've talked about in the last couple of weeks. Many of these signals actually create a counter trend within a trend. So these signals can always be a definitive market turn, or they can be a counter trend within a trend. And as I've told you over the last few weeks, try and get you to think this way. After a Danielcode signal's been elected, count to 3, because if it's simply a counter trend, it will fail in the majority of times within 3 bars, and that's because markets that are in a trend will generally only correct 1 to 3 bars. If they're not in a trend, there is another innumerate, uncountable number of types of corrections they can do, but the one we're interested in is the 1 to 3 bar counter trend, because that's the one that tells us that there is a dominant trend in place. So you were elected there long. That's where you got into the trade. Here's the next day, the Thursday. This is 1 bar up. So automatically, without me telling you anything about the signals, you should have been prepared to sell that bar. Excuse me, and we have talked about that on at least the last 3 or 4 weeks. I'm going to continue talking to you about it because in this sort of market that we're having now, it's the failures that are giving us the best results. So it's vital that you look at this stuff and you say, okay, there's a signal. If this is simply a counter trend, it's only going to go up 1 to 3 days. There's 1 day, there's 2 days, sell the low. Or if you didn't count it until your day of entry, that was 1 day up. Either way, you had to sell the low. You got a nice return for your trade. But, it was required a bit of brain power to get it there. Here's Euro GBP. I thought you'd be sick of these complex trades by now. So here's a really simple trade. We had a plus buy signal for this day here. And one of the things about the plus buy signals, as I've said to you before, is they too can come early. Whilst we say that they must be elected the day for which they're posted, they do have a propensity often in slow markets to come early, which is what all the Danielcode signals do, and they come early because I've designed them to come early. There's not a lot of point in signals that come late. That's what everyone else does. Ours come early. So with these plus signals, if you've got a little bit more confidence in your trading, you've been doing it for a while, don't be frightened to write them down and look to see if they're going to carry forward for another day, because quite often they do. And you won't see them carried forward in the trade program, because the trade program just worked on our basic rules, but I want to show you how worthwhile carrying these forward can be. So there was the plus buy signal. If you carried it forward one day, you got elected long, and the trade looked horrible on the close, and you were probably saying nasty things about me. But once again, have to excuse me with this cough, folks. It's taken a while to throw off the bout of fever and malaria, and it's left me with a little bit of a cough, so I hope I don't irritate you too much. So you had to be patient for the next day, and whoosh, off it went. So simply by taking these plus signals, writing them down, keep them for one more day, you'll find that they can be very worthwhile. That was a really nice, simple trade. GBP Chief is the next one we're going to look at. I know we haven't done a lot of on Forex. I wanted to show you guys this is the same thing. This was a plus sell signal in GBP Chief. Your chart should have changed by now. It has. And there was your plus sell signal. It was an inside bar, so what do? Carry the bar forward, carry the trade forward for another day. We treat the inside bar as a null or a void, which meant that you sold the next day here. You sold below the low of the last day that was not itself an inside bar. The low of this previous bar is 15278. We have a 5-tick buffer in Forex, so you sold at 15273. Same thing, it didn't look so nice on the day you entered. Boom, look what you got here. I'm going to have to move along with this. Daryl, I'm sorry, I seem to be running a bit late. I had a lot to tell you people, and folks, let me move along a bit here, because there's a number of these other variations of trade methodology, which if you can get your head around them, you're going to see some very worthwhile results. This is AP. This is the Australian Share Price Index, the SPY 200. And what we had here is we had a blue line sell signal back for July the 28th, which was elected. There's our one day down automatically. After a sell signal selected, the very next day you should buy it. We buy the high there, and up it goes 1, 2 days up, and then into a standard key reversal bar which had a plus sell signal on it. Now, we know that this was a blue line sell, which means that these two bars here, 0723 and 0725, were at a Danielcode blue line. And I've told you before that once these markets lock onto a blue line, they can go past them significantly without destroying the context of price target acknowledgement at the blue line. So this plus signal here had much more potential than simply being a one-day trade. Nonetheless, it was a pretty simple plus signal. If you took that sell, down it went, and if you got out the first profitable close, you made a nice bit of money. But if you saw this a little deeper in context, that we had massive sell signals on all of the US and other equities, and don't forget, this Australian market, it follows the S&P pretty much. You don't always see it clearly because it trades at night on a system that's called SICOM, which slavishly follows the S&P day session. But these major turns all follow the US market. A big chunk of the Australian equities market is actually owned by American hedge firms. So if you saw this in terms of the context that we had massive sell signals in all of the US markets, you might have suspected there was going to be a little bit more to the downside here than one day. Nonetheless, if you followed the standard protocol and got out the first profitable close, you did very well. If you took the time to look at the stochastic and put this in terms of the context of all the other markets, then you followed it down with a trailing stop. Now, don't be frightened to do that. That's a valid method of trading. And if you feel comfortable with that and you're experienced enough to do it, you will make a lot more money. So you were a 2-bar trailing stop all the way down here. This was pretty simple. It never threatened that, and now it's well and truly oversold after Friday's price action, and there was about $5,000 per one contract in that trade. ES, I don't think is going to add much, but I had a note here to show it to you. Here we are, same thing, blue line sell signal right at the top here. That meant you had to follow this down with your 2-bar trailing stop all the way down until you got oversold on the stochastic, which is here on July the 31st. You went to a 1-bar stop, which was above this bar, and you got stopped out there, made a nice $2,200. Now, from there, 1 bar up, you had to sell the low, down it went, down it went. Then we had a TO3 buy signal. You got long at this point here, and then you got an outside bar. You had to stop and reverse there, and you didn't get a profitable exit to close. So we had another buy signal here for Friday, which means no matter what you did in this part of the chart, you lost money. And that's just a reality of trading. Sometimes when markets are confused and not clear what they're doing, it's sort of what started happening in here. No matter what you did, you lost money. You made a good lot of money on the way down, and you had a couple of nasty hits in here, and that's just unfortunate, and that's what happens sometimes. These outside bars are really a signal that the market is confused, doesn't know what it should be doing. There are conflicting pressures, lots of bulls trying to buy this market up, and it was Friday, and here's your little sell-off on Thursday, rally back Friday. Pretty typical of what these markets can do, and it has been a pretty difficult period this week here. You had to have your wits about you. I was going to show you the DAX here. Same story. I know not many of you trade the DAX. It's got such a big margin, but there's the plus sell. If you just took it at standard value, got out first profitable close, $5,100, pretty nice. If you use the trailing stop all the way down here, you got 10,000 off the trailing stop, exactly double. So it's a strategy always worth considering. Here's coffee. I've got more I want to show you, but this is going to have to be the last because Daryl has got quite a lot to talk about. Here's coffee. We looked at it last week, you'll remember. This is a marvelous trading market. It's got quite a big tick value, and you can make a lot of money in this market. We only added it a few months ago because Frank likes this market. So we wanted to have a look at it. It's pretty good. So you remember last week, when it was actually 2 weeks ago, we looked at this. We had our buy signal there. It went up here nicely. Then we got a sell signal. We had a nice little earn, $1,700 there. There was our sell signal, and then we had the automatic buy signal the day after. We lost $2,000 in this trade. This is a big contract, isn't it? And it doesn't look that exciting, but that's what it was. We lost 2,000, but by following our rules of the automatic buy after it sells selected, we got long in here again, and that was Wednesday, July 23rd, and I showed you this chart on the next day, the Thursday, and since then off it went, roared up here, all the way up very nicely until you got this blow off top, and you got a plus sell signal, which means we got short on August the 4th right in here, and that move up, it doesn't look that dramatic, does it? But it was worth $6,600 per one contract, and the same as we've talked about with these plus sells. If you wanted to wait to get out on the first profitable close, which is what the basic system says, here it is. On Friday you made $3,806 on the downside. Didn't look so good for a few days. That's what markets do, to test you and tempt you, and it's turned out to be a nice trade. And if you wanted to follow this trade down further, you would see that the percent K, the blue line, is now oversold. You'd be on a 1 bar trailing stop, but be aware right here, this little R at the bottom of the chart means that this contract is going to roll to the new contract on Friday. So you'd want to be getting flat in this market in the next few days if you weren't already. Okay, I had a few other things to talk to you about, but that's taken 55 minutes. So Daryl, are you there, mate? Let's see where Daryl is. Daryl, can you hear me?
Yes.
Okay.
John.
So
thanks. You're fine, John. Thanks.
Thank you for your patience. You've got all the figures, and you're going to talk to us about the Fraxen results and some interesting things that you have in mind. So I make you the presenter, Daryl, and see if that's working for you. So we should be able to see your charts shortly. I'm not seeing them yet. Okay, that looks like, I don't know what that was. We can see your charts now. Thank you. Go ahead, Darryl.
The charts, right.
Yeah.
Okay, John. Thank you. We'll start off on the Forex here. As John has already mentioned, hasn't been a great month. In fact, it's been a terrible month for Fraxen, particularly in the futures. Forex hasn't been so bad. Okay, so first of all, we've got the summary result for July, and these two charts just show market by market. And as we do each month, the top result is using the text stop, and that's a profit for the month of 1,682, and then the 180 tick stop outperformed the tick stop for the month, and that was a result of just over $2,200. Year to date, we can just quickly see these two figures here in the total column. The upper figure is the year to date using the tick stop, and the figure below is the year to date result using our 180 tick stop. Moving to the year to date summary, once again the two charts, the top one being the tick stop and the bottom one being the 180 tick stop. And we've got all the markets year to date, market by market. And as I said, when you put the Forex result in context of what we did in futures, which we'll show you shortly, even though it's a small result for Forex, it's actually pretty good. Now, just one small change that we're going to make is John and I have done a review of the markets, and we're going to stop covering the Euro USD. We're going to chop that out. It's just a consistently bad performing market, and we've been looking at ways that we can improve the overall performance. So for Forex, we're going to discontinue the Euro USD. We had debated the USD JPY, and we were looking to cut that one out also, but it turned around and produced a good profit for us this month in the context of all the markets. So for the moment, that one lives to see another day. Okay, we'll switch over to futures. Now, here's the drastic news for the month. A really terrible month across all markets, really, except for copper and soybeans. And soybeans has been by far the outstanding performer. Now, I'll just move on to the year to date. Our year-to-date results, there's some markets in here which are, once again in the review that John and I did, are consistently underperforming. Two of them, the DX and T-bonds, they are US-centric markets. They just don't seem to resonate with the Fraxen program. So we're going to take the DX and T-bonds out. We're going to discontinue covering them for the time being. We're also going to discontinue silver. Silver overall, apart from one outstanding month, silver has just not been performing either, and it's a market that not many, if any, people are trading because it's got such a high, as you can see down here, the margin required to trade silver is very high, So those three markets, DX, T-bonds and silver, we're going to cull those to try and get some improvement in the overall performance in the futures markets. The other market that we've left in, which we talked about taking out of the trading program as well, was oil. We've left it in for the time being because we know that a lot of people do trade oil. But oil has got a big level of drawdown, and it can have quite a significant influence on the account. So as I say, if you're looking to trim your own portfolio, the next one that we would be looking at would be oil. But for the moment, we've in fact left that in. Okay, so as I said at the start, it's this month's performance has really knocked the markets, and it was interesting that we had some open trades right on the turnover of the month, July to August, that produced quite a good level of profit. There was, as John mentioned earlier, the S&P and the DAX are highly correlated, and we had about a $13,500 profit across those two markets that didn't close out until the 1st of August. So those two results were excluded from these results, because to be consistent with how we report, we only ever report on closed trades at the end of each month, and those trades which were significantly in profit at the end of July but hadn't closed out, as a consequence of that, they actually got left out of this result. So that negative 26,000, the DAX and the S&P, at that point they were actually in profit by about 13,000. Now, having said that, the DAX really has been the one contract that's been holding the futures together, and a lot of people don't trade the DAX obviously because of the very high margin on it. And without the DAX, across the futures markets generally, those people that are trading them, trading the rest of the markets, you will be in a pretty sad position at this point, I would imagine. And it's John's talked about the difficult market that we're in at the moment. FrankZen is a momentum-based program, and what we're finding is that we'll get a move that takes a little while for the momentum to build before we get in. We're getting in at close to tops or bottoms, and then the market tends to meander back, and it's not generating the momentum in the program until we're getting a reversal signal, which is then quite significantly in loss. Having said that, we are also seeing a lot of trades that are moving into profit, and then because of that choppiness, lack of direction in the markets just start meandering in a direction, don't generate significant momentum for us to get a signal. We just see that profit that we've got slowly disappear, and suddenly we've got a trade that was profitable, and we're exiting in loss. I know that John's had a email this week from one of the FrankZen people, Gary. I don't know if Gary's on the webinar today, but Gary, John shared me with your email last night, and we fully empathise everything that you're saying in that email, because this is what the market has been doing to us, and the results that you've been experiencing. You're not doing anything wrong that I can see in terms of what you wrote to John. It's what we're finding with the markets at the moment with FrankZen, and what I would suggest, and John has alluded to it, that we're experimenting with, is during periods like this, there has to be I guess, a bit of management take place in terms of your trades. And while the market is in this state that it's in at the moment, my suggestion would be that you are looking for profit and taking profit, and not necessarily waiting for the reversal signals. John's talked about various ways that you can manage your trade with trailing stops, using targets, whether they're a blue line target, the 593 line target. The 593 target is a deadly Danielcode target, and that 593 line on a retracement is a very good one to use to, even if you get to that target and get your stop to break even, and then implement some form of trailing stop strategy. And then when you've got trades, and I remember seeing a classic one last week, it slips my mind just which market it was, but it might have been the Russell, where we hit a 89 retracement. It in fact went to the 742 retracement, and then it went past that and went on to the 89 retracement. But those are two significant levels of retracement in the market, and when you see yourself in profit at those sort of levels, with the way the market is at the moment, honestly, my advice would be take the profit. I know that we put Francine up as a program that you let run from signal to signal, and that's certainly the way that it's been designed to operate, and it's certainly the way that it's worked up until about the middle of June. But the way the market is performing at the moment, I would suggest that we need to be looking at some alternative strategies to provide a bit of management to the trades.
Yeah, good
okay,
stuff.
John,
thank you, Daryl. That's really good. Thank you.
That's about it, John.
Can you hear me all right, mate?
Yes, I can.
So, interestingly, I had an email 10 days ago from Peter Norton, who you remember from the Taupay tutorial. Yes. And he's a townie of yours. He's down in Wellington. And he's trading Forex, and he's got set targets, and he's in Forex, and he's doing very, very well in this difficult time. So that might be the clue that as you lose this volatility, as you say, you've got to be introduce some management, and don't let a winning trade turn into a losing trade. Set your targets if you and whatever you do. Try to make it consistent as a percentage of your stop loss, otherwise you'll be all over the place. Or use the Danielcode ratios, the retracement ratios and what have you. They're very, very strong. That's where markets go. So Daryl, if you can throw this back to me, I want to thank you for being with us again and all the hard work you and Sage do to get these numbers for us. I guess on a global point of view, if you look at all the returns that we've had this year, having this massive drawdown is not inconsistent with the level of profits we've had, because they have been just so extreme, way over the top. Really, I've never seen profits like that in a program. I guess the odds of a significant reversal in earnings were always there. And it's not only FracZen that's been affected. A lot of the programs have not done well in this period. Are you back to me now? Yeah. And one of the things that's interesting is that there is some seasonality to the month of July, because the hedge fund guys and the prop traders are very active up into the end of the financial year, and a couple of days after, and then I suppose it's more a matter of social commentary, but it affects markets. The bulk of those guys take a big holiday, often 6 weeks or so, and they're not actually actively trading. They leave the management of their businesses to their number 2 or number 3, and the level of aggression and volatility disappears until those guys come back from their holidays, which they should be doing in another week or so. So that's just a comment. There's no scientific basis for it, but it's something I've observed over the years, it's not uncommon for July to feel like an entirely different market, and the first couple of weeks of August as well, and that's pretty much what's happened here. So that's where we are. And thank you for your attendance, folks. I don't see any questions here. Everyone's obviously pretty happy. Oh, here's some. Any news on tutorials during the full period? Lewis or Louis, probably Louis. We usually have a tutorial in the States late September or October. Louis, I'm not entirely sure whether we've got enough interest in that to go ahead. Do write to me if you are interested in the US tutorial in that time period, but we'll certainly be having our end-of-year tutorial again at Waiheke Island, which is in the Hauraki Gulf of New Zealand. It was a huge success last year. Everybody who was there was quite enamored with it, thought it was the best one we'd ever had. And it's a really nice, low-key, but very, very nice, elegant, quiet place. We all loved it, and behaved badly as well. So that was good. So we'll be doing that. That'll be the second week of December, if we don't have the one in, regardless of whether we have the one in the US or not. That's where we'll be. Okay, let's see any other comments here that I can deal with. Chip, any chance seasonality plays a role in these gaps? Well, yes, they do, Chip. And yeah, I hope I have answered your questions you say there. There's Louis. Michelle, any daily timing on ES? Darrell John has promoted the idea that all markets should be traded, not pre-levels by selecting certain markets. Using bias is not the incorrect way to trade these issues. Those markets not provably probable, etc. Are we biasing our trading, doing what is suggested? Oh, there's two separate questions there. I'm sorry, from Michelle. Any daily timing on the ES? Every day, Michelle. Just have a look at the TO3 and plus signals. We have signals for most markets every day, and you just have a look at the TO3 or plus signals, and then go to the. Let me bring that up so I can show you. Okay, you should be able to see the Danielcode website right now. You just these boxes up the top here, TO3 and TO3 plus, they say pending at the moment because they don't have signals. Once they have new signals in them, which is usually 3 hours after the market's closed, you just click on those and they will show you what the signals are for the day. And when you've done that, you go to this link here that says Trade Program. And that will give you the Danielcode trade program. There's no signals in there at the moment, but normally you just type in your account value and your risk value that you wish to take and press calculate contracts. That page will open up and it'll show you every trade. It shows you exactly where to enter, where to put your stop, and if appropriate, where the first target is. So that's Michelle. This is Ben. Are we having selection bias by removing some of these markets? Let me come back to that, Ben, because that's an interesting question. And he said, is a longer period required to review those markets that are troubling so far this year? No. What happens with FracZen, Ben, this version of FracZen is called FracZen Text. And as you know, we send it out to you by cell phone, and that's a program that Terry wrote for us. Did a marvelous job to get that going for us, but it has a couple of limitations. One of them is that we can only run all of the markets at the same speed, and there's a few different things that happen inside FracZen. One is the speed of the market, and we have an algorithm that looks back over a number of days, which varies, and it chooses what is the right speed, the current speed for that market. But because of the way the program has been written, we have to run all the markets at the same speed, which means you've got, futures, Forex, and different markets in Forex all running at the same speed, and the packet that we've chosen is the one that is the most common to all of them, but they in fact all run at different speeds. So as we go on developing frags, then we'll hope to get to something more sophisticated where we can set the speeds individually for each market. Now, having said that, that's not itself a panacea, because the speed of markets changes, and it's not uncommon at all when you're doing back testing over 2 or 3 or 4 years, as I do, to see markets that are absolutely quite magnificent, but they go to sleep for 6 or 7 months at a time, and they are disastrous. And if you're looking at really long periods of trading, it doesn't matter, but for us, of course, it matters. So it's a question, first of all, of using some management tools to try and capture the profits that these programs are offering while this market's in a bit of a sleepy state. And then it's also, on the other hand, it's for me to keep working to find ways of bringing you a program that's a little more sophisticated, where we can assign different values to different markets. So that's that. And Ben says, my DAX Fraxen signals have been excellent. That's great. So from Sage, tell Ben I'm 2 weeks off a year of recording the text. In that time, all the markets have had a turn on the podium and a turn in the doldrums. The losers being removed have never won a medal in my books. I'm sure there'll be other markets to replace them. We've got, because these markets trade so often, Ben, we have a massive amount of data, and it's more a question of some of these markets. They don't run at set speeds. They're markets that are particularly susceptible to news. DX and T-bonds come into that. Here's my mate Rob from New Zealand. Speed of markets equals ranging or trending. Yeah, ranging, Rob. That's really what Fraxen's looking at. It's looking at the last X number of days, and it's running an algorithm that picks the speed at which it will set those markets and divides those bars up into fractals, which is really the speed of it. I'm going to, in a couple of weeks, I'm going to be able to show you some research stuff that shows what the range of speeds these markets run at is, and it's quite extraordinary how much they do change their speeds over a period of time. Okay, that's good, mate. Have a great weekend, Rob. Ben, saw a quote I like, you may care to share. Markets cannot be reduced to an indicator. Ha. Well, you'll be surprised what I can do with this, Ben. I just need more tools. Okay, thanks for this explanation. I saw this quote. I've got it. All right, that's it, guys. Thank you. Lots of thanks to all the welcome to all our new people, and good to see you here. And special thanks to all our old mates who have been here for year after year. It's always great to see you here. I wish we could all be together and have a decent session on the source together. But maybe some of you will come to Waiheke Island in December, and Shift will be leading the social gatherings there, and he's quite a player. We have a good time. Okay. Cool. Oh yeah, thanks, Rob. Just got to keep whacking away at that quinine. Very good in the gin and tonic. It's about the only saviour. All right, buddy. All the best, folks. Thank you for your attendance. As usual, we've gone 15 minutes or more over time, so I'm going to end this now. Have a great weekend, people, and I'll look forward to having time with you again next week. Daryl, particularly, I thank you, and Sage, for your wonderful work that you continue to do for us. Keep it up, and I'll talk to you shortly. Marcel, thank you, my friend, and bye. Peter Norton's left, Rob H. has left, and people are leaving. Thank you for staying with us. Marcel, I hope you're feeling really well. All right, God bless, folks. I'll talk to you soon. Bye-bye.